So maybe if you see the report, then you can see maybe 14 also falling exactly. I can see the future. Just joking. Okay, anyway, let's start today's report. Yeah, the 13th of August 2025. Right. Okay, so let's see. Today, the topic I'm going to discuss is Bitcoin Treasury strategy. Is it a bold corporate investment or high stakes gamble? Now, this is something very, very crucial that I'm going to discuss right now. Now, public companies embracing a Bitcoin treasury strategy is getting more and more popular. We are hearing this, and day by day, we also see more companies doing that, and not only just Bitcoin. This particular strategy has also create same style of strategies for Ethereum as well. Okay, Ethereum is following up with all these kind of things, but today we just want to discuss Bitcoin first. Okay, this because it started with this. Let's discuss about this. Now, in recent years, a growing number of publicly traded companies have followed MicroStrategy's footsteps by converting a large portion of their treasury or even their whole corporate strategy into Bitcoin holdings. Now, Wall Street strategist Tom Lee noted that MicroStrategy, which rebranded to Strategy in 2025, aims to accumulate 1 million Bitcoin, which is 5% of all Bitcoin. Now, a level at which its stash would be significant that the company gains what Tom Lee calls a sovereign put in the Bitcoin market. Now, in other words, when we say a sovereign put, it's a situation where a firm is holding so much Bitcoin, it becomes strategically important, akin to a Fed put for Bitcoin, which has the potential to influence market dynamics or even attracting government interest in its stability. Now, if the US government would want to own Bitcoins and it can't get the Bitcoin on the open market, what it could do is actually buy shares on MicroStrategy, and that itself, it owns Bitcoin via that proxy. So this is a strategy by strategy. Okay, so below are a few prominent examples of public companies worldwide that have pivoted to a Bitcoin-centric treasury, even in industries with little prior tech or crypto background. Okay, but I'm just naming those top three first. Okay, that I'm seeing that all of us probably would know, and of course, MicroStrategy. Originally an enterprise software firm, MicroStrategy famously became the first major company to adopt Bitcoin as its primary treasury reserve in 2020. By 2025, it had rebranded as Strategy and held around 628,000 Bitcoins on its balance sheet, acquired at an average price of $73,000 per Bitcoin. Now, this massive hoard, over 70 billion in value at mid 2025 prices, make MicroStrategy by far the largest corporate Bitcoin holder. The company's CEO, Michael Saylor, effectively turned MicroStrategy into a Bitcoin investment vehicle while still running its analytics software business on the side. Then we have MetaPlanet from Japan, is dubbed Asia's MicroStrategy. MetaPlanet is a Japanese public company that pivoted its strategy to build a large Bitcoin treasury, originally involved in Web3, metaverse, and digital business ventures. MetaPlanet began accumulating Bitcoin in 2024 and held about 7,600 Bitcoins by mid-2025. The company openly frames Bitcoin as a strategic reserve asset and inflation hedge. Then we also have GameStop, okay, the infamous GameStop. All right. In a surprising pivot, video game retailer GameStop adopted a Bitcoin Treasury strategy in 2025. The company raised capital via a convertible note offering over 2 billion specifically to buy Bitcoin for its reserve, ultimately acquiring 4,710 Bitcoins. This move made GameStop one of the top corporate Bitcoin holders, right? So these are some of the examples. Now, I think the major question is this: is this trend sustainable or a bubble? Okay. Now, the rush of companies turning into Bitcoin treasuries raises concern about market stability and corporate risk. Some analysts warn that this trend has shades of the late 1990s dot-com bubble, when firms with shaky fundamental rebranded around a hot technology to inflate their stock prices. Now, if even a fraction of corporate cash reallocates into Bitcoin, it could drive prices to extreme levels very quickly, creating a Bitcoin balance sheet bubble. As in the dot-com era, a few strong players may survive and thrive, but many could collapse once market euphoria fades. Now, a sharp Bitcoin downturn would test these companies' resilience. Many have concentrated exposure to a single volatile asset. Survival without selling Bitcoin would depend on cash buffers and alternate revenues. Firms with thin operating income may be forced to liquidate Bitcoin at low prices, potentially locking in losses. Now, if Bitcoin price enters a prolonged bear market, the danger is not only that individual companies will be hurt, but that collective selling by all these companies that are, what I say, not stable. They are not experienced enough to handle this. They don't have a good strategy. This collective selling could magnify the downturn because everybody's dumping at the same time, right? So many of these newer Bitcoin Treasury adopters have little experience managing through crypto cycles and lack diversified income streams to absorb prolonged paper losses. So if operational cash flow and financing options dry up, these companies may be compelled to liquidate part of the Bitcoin holdings to fund operations, service debt, or meet margin requirements. So some of the companies, right, they use debt or continuous equity issuance to buy more Bitcoin, which boosts Bitcoin per share metrics and attract more investors, and hence its rise in the share price. Well, critics argue that this is unsustainable and dependent on bullish sentiment to keep fresh capital flowing. So in a worst case scenario, multiple companies could hit their breaking point around the same time, leading to this synchronized selling. Now, this would increase supply, hitting the market during already weak conditions, exacerbating the price decline. Now, while some large holders like MicroStrategy claim they will never sell and have structured financing to avoid forced liquidation, smaller and mid-sized firms without deep reserve could be vulnerable to exactly this liquidity crunch. Now, if too many of these players enter the market near cyclical highs and become distressed in a downturn, the resulting sell pressure could accelerate Bitcoin's fall, similar to the cascading liquidation seen in leveraged crypto markets during 2022. Okay, so let's look back into some history, look into the perils and what are the lessons. Obviously, the biggest tech crash in history so far is the dot-com bubble. At the height of the dot-com boom, investors' enthusiasm for internet reached a fever pitch. Many companies, even those with no meaningful connection to the internet, added .com to their names or rebranded entirely to position themselves as online businesses. Now, stock prices soared purely on association with the trend, often without solid business models or revenues to justify the valuations. So when the bubble burst in year 2000 to 2002, the vast majority of these companies collapsed, wiping out billions in market value. However, a small group of disciplined, well-managed firms with genuine innovation and viable business models such as Amazon and eBay survived the crash. Now, these survivors went on to dominate the next era of digital commerce, proving that while the hype cycle was destructive, it also laid the groundwork for internet economy's long-term winners. Okay, and there's also an example much earlier, gold miners in the 1970s. In the 1970s, gold prices experienced a dramatic surge driven by inflationary pressures, geopolitical uncertainty, and the end of the gold standard in 1971. The price rally attracted a wave of new gold mining ventures, many of which were undercapitalized, poorly managed, or entirely speculative in nature. Investors eager to capitalize on the gold rush poured money into companies that promised outsized returns, but had little track record or operational discipline. When gold prices inevitably corrected, most of these new miners failed, leaving investors with significant loss. Yet, a select few established and well-managed mining companies weathered the downturn, continuing to operate profitably and emerging stronger once the market stabilized. So the same thing is seen over here. So the lessons are very simple. The asset's long-term value can rise, but not every company tied to it will survive the journey. Okay, so Bitcoin can still rise, or for the based on the current trajectory. But like I said, especially Bitcoin, such a volatile asset class, not every company tied to it will survive the journey. Okay, so how are you going to survive this? Choosing the right company. Okay, how to spot the strong Bitcoin Treasury company. So for investors, enthusiasm around the Bitcoin Treasury trend can be intoxicating, but not all companies pursuing this strategy are equally well positioned to succeed. The challenge is separating firms that can endure the inevitable downturn from those that may be forced to sell at the worst possible time. So by applying a few key filters, investors can better identify which companies have financial strength, discipline, and strategic clarity to survive and potentially thrive, even if Bitcoin's price experiences sharp corrections. Now, these are the following checklists of the core traits of a strong Bitcoin treasury company. Core business strength. It can fund operations without selling Bitcoins. Okay, that is very important. Now, strategy has its own business, right? That it's making money, it can fund the downturn, and the bonds that it's buying, the interest it's pay is very low. Okay, so definitely can fund without selling Bitcoin. Okay, now there is this leverage levels. Is the company buying Bitcoin with manageable debt or relying on constant equity dilution? If it's like, if it's constant equity dilution is also not a good thing as well. So how is it managing it? You cannot have too high of a debt as well, right? Entry price and timing, they buy the peak or dollar cost average over time. Now those companies, especially this year, that just joined this year and later in the year in 2025, those are buying at prices, really peak prices. Okay, so if you have companies that have been buying and bringing the average, having a lower average, strategy has, like I mentioned just now, it has what you call 70 over 1,000 average, right? 73,000 average. So it can weather some of the drop in the market. Okay, but because that won't cause jitters, right? But imagine that a company just bought in at, let's say, 100,000. If it drops below 100,000, that means it's like a loss already. And how long would the investors be confident, especially if you have a longer term downturn in the cryptocurrency market? And can it, and then if it drops more, can the company survive a multi-year bear market? Is there any liquidity cushion? And most importantly, this company mustn't follow the herd. Okay, there must be a clear, consistent, long-term strategy how to deal with this if you want to be a Bitcoin Treasury company. So if you do your homework, right, you will probably understand which are the best companies, and yeah, that's it. And who will survive, because inevitably a downturn would come, and we will see those definitely see companies with weaker hands, you know, not survive this downturn. So be careful in the companies that you are investing in, okay, especially in an asset class that is known to be rather volatile. Okay, so with that, that's the report for today.